Everyone. The webinar we're going through today is our first lender webinar. So what I'll do first is introduce myself. My name's Glenn Franklin Jones. I head up the lender relations team within Brickflow. So my responsibility is to look after our lenders, two of our lovely lenders, Roma and Shawbrook, on with us today, make sure their criteria and their products are right, and they are happy with the platform itself and how they receive their leads. This is the first of our lender and joint webinars with Brickflow. So we are looking at doing more of them. So if there's any ideas at the end of this one that you'd like to see and topics you want to know and hear and discuss with our lenders, please let us know, and we'll look to put them into play as well, because we feel it's a key training and knowledge piece for brokers. And I can say that coming from an ex-broker background, where I think these things are vital to really understand what our lenders are needing and what they're looking for in cases. So, which is why the topic of our first webinar is how to get deals done. So, main reason why we're looking at the webinar and how lenders love to lend, it's very much around, we know that there is lenders out there that do love to lend, as Michael, I'm sure, will allude to in his strapline. There's abundance of credit out there. And if you're brokers that are registered with the NACFB, Daily Briefing, BNC Comms, you will see constantly new lenders, funding lines coming through, institutional and private. So there is definitely an abundance of credit out there and lenders wanting to lend. However, on that note, from the research we've done with our lenders, we've noted that only 4% of these inquiries actually come to fruition and complete. So there's got to be reasons sitting behind that, which is the reason for this webinar today, to kind of understand from a lender's perspective, what are them barriers and what can we do to help more of them deals go through. So what we've identified as some of the key barriers. So presentations of applications from brokers to lenders. There's generally a lack of depth in a lot of presentations, and that could be a training element, which is, again, why we're looking at webinars like this. It could be an experience element where you've got new brokers from the residential world moving into the specialist finance market, and they need that training. They need that knowledge, that expertise. Criteria knowledge. As we know, criteria changes so frequently now in the lending market. So the average shelf life of a mortgage product is around about 15 days from the latest NACFB research. So that shows how quickly criteria and products can change, which is very difficult for a broker to keep on top of. So that's where we feel as Brickflow we can really help with that, with the amount of information that we have and we speak to our lenders consistently about. So that's another point. Lack of market transparency. So it kind of comes back to the fact of, again, some lenders, it's hard to search the whole market. There's not really a tool out there aside from Brickflow and the specialist finance market where you can look and approach so many lenders at one time. So it's very difficult to understand that marketplace. Communication between broker and lender, and when we get to professionals and legal stage, it's very much archaic. We feel within Brickflow, and the emails and so forth, there's not a lot of the time things get missed, and there's got to be better ways of doing that, and bringing in technology and using technology with that, we feel is something that can definitely help boost that. So, and the final thing is kind of going back to the point one, really, where lack of connections and relationships, where new brokers, new entrants to the market haven't got them connections with the relevant lenders. So they don't know who to speak to when they've got that deal landing on their desk, and it's hard for them to place. So kind of going back to us at Brickflow, we can enable them new brokers straight access to that specialist lender market, straight into the people they need to be speaking to. So how we propose to solve these issues that I've just raised there. So technology is something that we feel like is massively underutilized in our industry. Our industry is very much behind the curve in that space. So we feel like there is a massive ability there to kind of embrace that technology and enable some time-saving element, which, again, going back to being a broker previously, a lot of your day as a broker is admin. There's so much admin in there. It could be following up cases, following up leads, etc., doing admin, doing submissions. The technology can really help bring some time back to our brokers' desks and enable them to go out there and get more deals. So The ability that Brickflow gives you to source and apply for the finance and communicate with lenders all in one place is vital. That kind of brings even more time back. So it's utilizing the most of your time and the most of your week in that side. With the amount of lenders we've got on panel, so we've got over 100 lenders now on our panel, which is live rates. You can come on, you can find all the rates in one place at one time, and it saves you having to pick up the phones 10, 15 different people, or the old route of the email side of things to find out what lenders do and where they're sitting in the marketplace. And what we do find as well is a lot of our lenders don't publish what they do even to the brokers publicly. So the access to them live rates and them live criteria is also even more paramount, knowing that you can see it all in one place. So one of the bits that is kind of picked back in with the knowledge and the training element within the system is the system enables you to generate a smart appraisal tool as a broker to complete all the relevant information that our lenders are asking us for in regards to broker submissions. It trains you as a broker to know what questions to ask in your next client conversation, but it also builds out a presentation where you can present that to your client and it looks like you have made that presentation. So it's very much a strong knowledge and trust piece with your client base. So final point is kind of following on from that, making sure you provide what information the lenders are looking for. And I'm sure Terry and Michael will go into this in a bit more depth, but providing a quality application and a quality submission day one saves so much time, and it enables our lenders to review cases quickly, reply quickly, put terms on quickly, but also give them quick no's quickly as well, which as a broker is also hugely important. So we feel like that piece around the lenders and the quality of that submission is paramount to, and also it's a trust element of, then when you're speaking to your client, what you've got to ask for, what information is needed, and you start to build and gain that knowledge. So Brickflow and where we feel we can help, as I mentioned, the industry itself is very much, we feel, behind the curve. So what Brickflow is enabling our broker users to do is do things quicker, easier, and simpler. So our record for a dip is back in 7 minutes, which that's pretty amazing considering that's a dev finance dip. So days gone by when you spend weeks waiting to get a decision principle for dev finance, when you can get one in under 7 minutes. It's allowing you to do an application for a loan that would normally take you weeks in paperwork and preparing a presentation, using the smart appraisal tool to build that presentation in under 20 minutes. So that in itself is a time-saving element that's going to allow you as a broker to go out and to look more deals, more business, basically. If off the back of this webinar, you're looking as a broker that is not currently using Brickflow, if you reach out to us on the link that we can send out, you can get a free 30-day trial to use the software, and our customer success team, Tessa and Anna, will be there on hand to help. What I'll do now, without further ado, I will introduce our two presenters on the call. So I will introduce and allow them to introduce themselves. Terry first at Shawbrook. So over to you, Terry.
Thanks, Glenn, and morning, everyone. So yeah, just quickly. So I'm Terry Woodley. I'm the MD of Development Finance at Shawbrook. I've been with Shawbrook for 13 years. Originally, I started in credit, and then I headed up their risk. So there's a further question later today, I think, about credit committee. I'm probably have a lot of experience in kind of what we look at that side. Prior to that, I was ex NatWest and ex Clydesdale, but I've been doing development finance for about 20 years, and I've been doing. I said it's 25 years experience there. It's actually probably nearer 30 now that I come to think about it, which I don't like to admit to. But I've been building development finance now for 7 years at Shawbrook. And as it notes there, we just reached a milestone a couple of months ago where we did 2 billion of lending. And we have very strong appetite to continue growing development finance as a product type and an asset type. The bank really likes development finance. So we're really looking to expand, and we're recruiting another 12 people this year to the team. So we'll just be shy of about 50 people in the team. And we cover the whole of the country. So we've got people in offices as far up as Glasgow, across to Devon, over in Cambridge, Bristol, Manchester, Birmingham. So we do look at the whole of the country. So that's me in a nutshell.
Excellent. Thanks, very much appreciated. So I'll hand the floor over to Michael to introduce himself as well from Roman.
Thanks very much, Glenn, and good morning, everybody. My name is Michael Allis. I'm the Commercial Director for Roma Finance. A bit like Terry, I've been in the specialist finance arena for probably longer than I care to mention, but it's been around 20 years. During that time, I actually started out in recoveries. So I've gone from recoveries all the way up to being into commercial. So I've seen the lifespan of the customer journey. And I'm proud to say over the last 20 years, the last 3 that I've spent has been being part of Roma's 15-year history, which is the borrower first lender that loves to lend, obviously, which is probably one of the reasons I'm on this call today. But also as well, a bit like Terry was saying, we operate in the bridging space, but we do operate heavily in the development finance space and refurbishment as well. We probably sit just below on our loan sizes than a Shawbrook, but I think we share certainly a synergy in the type of people we like to do business with. And for us, we're laser focused in those borrower personas, because our goal is to lend money to people who can add value to an asset, to create wealth from them and their families, to enable them to reinvest that into the next transaction. So by us giving the quality service, that next transaction should be with us. I think that's enough from me, I think.
Yeah, no, that's fine. What I will do, I'll now stop sharing the presentation, everyone, and then we're just going to start going straight into the questions with Michael and Terry. So if you can just bear with me. So what I'll do is, okay, if I go straight to yourself, Michael, because you was the last one speaking. So first question we want to kick off with today. So what would you class as the key components of a winning presentation when it's sent over to you at Roma?
There's a lot of words that you can use. I think first and foremost is why is the broker or the person who's submitting the transaction, why are they championing that case? What is it that they've seen within that case that they believe it's worthy of bringing to a lender? And then secondly, why us? Why do you feel? Because when you're picking a lender, you're not just picking the person who's going to give the money. You're picking somebody who's going to be the majority business partner for that transaction to get to the piece. So the winning presentation, and that does get lost sometimes, is why us as the lender, and why this transaction are you bringing forward? And then when we start, that starts to build the story of what you're looking to do. What things have you seen as part of packaging that case and looking at it? What on your due diligence that's made you get comfortable with that? Because what we find, the best transactions where people are open and honest from day one to say, as you underwrite this case, you will notice X, Y, and Z. And here's what I have done, or we have done, to get ourselves comfortable with that. So be ahead of the curve in a winning presentation is we will always look through the application form, the assets liability statement, their expertise, etc. But they are all documents that are standalone that we create a picture from. Share your picture. We like to do that through a telephone call ourselves or a Teams call with either the salesperson or the underwriter. But a winning presentation should be, why are you proud to bring it to us as a lender? Why choose us? And then how can we now collaboratively work together to deliver for the customer?
Yeah, no, that makes sense. And from feedback we get from lenders across the board, what we find, and agree with me or disagree with me here, Michael, on this, but the right borrower can make a half decent deal work, but when you flip it the other way, it can go the other way completely, can't it?
Quite often, what you'll find is that the asset is always further down the line of what we would look at, because you're right in what you're saying, Glenn. A good borrower creates value out of any asset. A bad borrower can destroy value in a good asset. So why have you got a good borrower? And what you normally find is the asset itself, there might be quirks or a reason not to lend on the asset from just looking at it coldly. But when you understand who you're lending to, that's normally the reason why they're looking to raise capital against that asset. And then you can back that person. So actually, it's understanding the individual more than the percentages of the LTV and the LTGV, more than the asset itself. It's why are they doing it? What have they done before? Tell us that story, paint that picture, because that's the picture that we'll be painting ourselves, so we can use shared information from day one. I'm sure Terry might have a similar opinion, but a lot of development finance is storytelling. You have to visualize creating a piece of land or a commercial unit into somebody's home. You have to visualize that. So and also, as we are a custodian of our funding lines cash and the way that we deploy it into the marketplace, the borrower is then a custodian of our cash, managing that risk. So we've got to know who we're going into business with. So really, the best presentations we see articulate that from day one, so we don't have to piece it through. And if there is a skeleton in the closet, get it out early, and tell us what you've done to get comfortable with it, rather than it come further down the line.
Yeah, no, that makes complete sense, and it's the consensus that we generally get. So I'll spin it over to you, Terry, if I may. Same question.
Yeah, thanks. Yeah, no, I agree with Michael. I mean, for us, we break it down into three elements. We break it down into the borrower, into the scheme itself, and then into the exit of the scheme. So how we're going to get our money repaid. But first and foremost is the borrower, is the developer. And, you know, and Michael's right. And one of the key things, and I think this is going to be very interesting going forward now into the market when we start seeing new deals come through, is this kind of getting the skeletons out of the closet. Because we know developers over the last 2 years have pretty much gone through hell in the market of what's happened, build costs, delays, and now they've got sales issues. So a lot of developers, their schemes haven't run on time and on budget. And always, one of the things I always see when we get a deal come through is we always ask for a bit of a CV, a bit of a background. They usually kind of give us a summary of the last few deals. And weirdly, the deals always seem to be on time and on budget. But we as lenders know that, especially over the last couple of years, that's probably not been the case. And what would be really refreshing as a lender is for either it be via the broker or via the borrower themselves, if they're going to send the CV in, is just to explain what went wrong on certain deals and how did it get corrected? How did it get fixed? Did they put the money in themselves? Did they work with the lender to get it fixed and sold and then moved on? Because is what we all sort of need to remember is that credit will rarely have sort of been on site or met the borrower. In some cases they may do, but it's for us, the broker and the borrower, to kind of paint this picture and this story to tell credit to get their approval and their buying. And in Shawbrook, I can speak for Shawbrook, credit would find it very refreshing to actually excuse me, see a CV that said, oh, there were some problems on a couple of deals and this is how it was solved. Because it's easier to get a deal approved once a deal is drawn and in motion. When a problem arises, that's where you probably need to make sure you've got credit on board as a group, and to be able to sort of say to them, yeah, look, we've got this problem on this deal now, but remember when we spoke to you about the borrower at the beginning, this is how they worked with the lender, this is how they fixed problems. It would be very refreshing and very helpful. So I would just say on the applicant side, like going forward, definitely just let the skeletons out. Just tell us what went wrong and how it was fixed. It would be very refreshing. And I think credit will really appreciate seeing that up front. So it is the applicant, is the borrower, is the first and foremost thing that we look to understand. And I won't delve too much into the project and the exit because they're kind of more self-explanatory. It's, you know, does the scheme make sense in the area that it's being built in? Do we think it will either get the rental or the demand? Does it all kind of fit and make sense? They're kind of more simple, but like I think as Michael was sort of saying, it's the borrower that's the key one that we all kind of look to and we really kind of hang our hat on is do we feel the borrower is fit for purpose to be able to do the scheme they're looking to do and can work through difficult situations and problems. So that's what I would kind of add on to that point.
Perfect. No, that's to be fair. It's like you say, it sounds like you're both pretty much singing off the same hymn sheet there on that side. So that's good to hear. There's no back and forth on that side. So the next one, and I'll keep with yourself, Terry, on it. So kind of really going back to what Michael said about the full picture. So how important is it that narrative and the story, like you mentioned, around a deal is presented to you? You know, how important is that? You know, the narrative and the story.
Yeah, I mean, it's fundamental to the success of a deal, because like I say, as I mentioned the last point, because we're painting that picture for credit to then look at and approve, and we will have been and met the borrower, we would have been on site, and we would have obviously met with the brokers on site with the borrower, so we'd all be there discussing and understanding what the project is and the borrower and that sort of stuff. So any amount of information that can be given to us to help us paint that picture, because basically a lender will put together a credit memo. It could only be anywhere sort of around 10 pages, and it'll be a summary of all those 3 points I mentioned before. So anything that the borrower and the broker can share with us and talk through to help build that story and explain why this is a good scheme, a good location, how confident we feel about the exit, even sort of talking about stress situations. So what do we think is going to happen if prices went down a bit or costs went up a bit? How do we feel we're going to deal with those? Sort of giving us the whole picture is paramount, because like I say, we have to present that to credit, and it will be their first time credit will have seen the deal or kind of been exposed to the borrower. So it's fundamental that we can, the three of us, the borrower, the broker, and the lender, can work together to actually build that story, that narrative, to actually explain it to credit, to get their buy-in as to what all of us are seeing and why we feel this is a strong deal.
No, that's fair. It's following on pretty much from our first point there, isn't it? It's very much understanding the deal, understanding the borrower very intently, and honesty around that borrower, what they've done, where, have things gone wrong? Let's explain why. What can, how did they overcome it? And, like you say, develop a CV, saying every site happened perfectly on time, delivered GDP, everything hit, sales exit. It's not the reality. And I think making sure them presentations are of the reality is key. So, day one, you've got an honest presentation. It's, what that borrower's like, what's, how they are likely to be going forward, in the best way you can forecast it. So, great stuff. And over to you, Michael, on the same question.
Yeah, I think it's important to note that the art of storytelling doesn't stop at application, as Terry's quite rightly said. We in our business, what we end up with is a sales submission from the BDM who, like Terry said, have been on site, spoken to the borrower, spoken to the broker, understand it. We internally phrase that the love letter from sales to underwriting, which is, this is why we should do it. This is, please look after our customer. But then the underwriter then has to create their story as well to move it through towards that credit committee and mandate and sign off of, now that they've looked at that picture, how have they got comfortable? And then when we pass that into a funded transaction, we then do our handover with the borrower persona form that goes into our customer services, which then is a love letter from the underwriter to the customer services to look after that borrower, because here's everything around them. The important thing is the storytelling is important if you're a borrower first lender, because it's understanding who the borrower is, as Terry quite rightly said before. That will determine how you navigate the speed bumps that will be in the road. Have you ever cost overruns, or even such a thing as extreme weather, or everything that we've seen in the last 4 years? That will tell you how that person will navigate and be able to move through. So creating that picture, I think the broker has got a massive part to play, because quite regularly, you will have lived, eat, slept and breathed this scheme 2 months before we've even seen it as a lender. You'll have been out there yourself, you'll have understood it, you'll have kicked the tires, you'll have asked the questions, you've created your own story. So the art of the narrative is to keep that narrative going, that we're all on the same page from day one. And then from broker to sales to underwriting to credit to loan cycle management, we're all managing that customer how they should be managed, and we're giving them the service that they require. So narrative is not just about getting your pack in and getting your deal through credit. It's actually how that customer is going to be treated and managed and move through that cycle, and the enability for us all to do future business with them over the course of the next 12, 18 months, once that first initial drawdown's done.
No, so that's really helpful, Michael. So if I'm if I'm a new broker entering the market in the specialist space now, what would you say are the key points of that story that I need to make sure I'm getting from my client? What's the key points within the story?
I'd turn it on its head. I'd find out which lenders do I want to work with, and how they want, what story are they looking to do? Because you said before, Glenn, you're 100 lenders, 100 plus lenders, Brickflow. We all offer the same product, but we will all say we do it differently. We'll all say that we've got our different USPs. What is it that if you're a new broker coming into it, what lender fits with your ethos? If it's about long-term repeatable relationships, find a lender that does that. If it's about a case that you want to get through quickly and then that's the end of it, find a lender who does that. But what you should do is find your lender panel first before you find your customer panel, and then you can get the synergy between the two. There's nothing worse as a lender, and I'm sure Terry and if there is any other lenders on the call today, well, no, there's nothing worse than the blind copy email with the construct of a deal that drops in your inbox. Because why me? I don't feel engaged in that conversation. Spend the time, find out the lenders in the space, request a meeting with the BDM, request a meeting with the management team if that's right, and understand. Because don't forget, if a lender is typically 75% loan to cost-ish on a scheme, they are the majority business partner for the customer to get the desired outcome. So pick the right business partner, and then pick your panel of lenders, then go find your customers. And that way you'll get the synergy through. And the art of storytelling should be a lot easier because you'll know what the lender needs rather than create your own narrative and try and make that fit 100 lenders.
Yeah. So it's bespokeness in yourself as a broker, basically, in that sense, isn't it? Being bespoke and bespoke with your own clients as well as the lenders. So I'll stay with yourself, Michael, on it. And the next point is, what a lot of brokers ask is around credit committee. So, and we know lenders vary massively, how frequent they run, what happens, etc. So the question really is, what happens within Roma at a credit committee meeting?
I think the first thing to bear in mind at a credit committee, we are a lender. So up until that point, the valuer and the QS will have been paid regardless of the outcome. The solicitor will be paid regardless of the outcome as long as they've been instructed. The brokers are waiting for the first drawdown to get their initial payment. The lender does not receive the benefit of the whole case until the customer pays us back. So the lens will always be back to that narrative. Is this customer, are we likely to be able to get the exit strategy that the customers want? What we found recently is that some customers will diversify the exits. So they'll have plan A, plan B, plan C. That's great. But credit committee, it's normally a group of people who want to get the deal done. They want to transact because as a business, we're there to lend money. Love to lend our strap. Yeah, we want to lend money. It's not where it goes in where deals go to die. Credit committee is where we take all the narrative and the story for deals to be done. But we will look at, first thing we will always ask is, who are we lending to? What experience? Why are we lending to them? Before we even get to the asset. So everything else could have, by the time it gets to credit committee, we should have had all the discussions about credit profiles, all the discussions about the strength of the contractors if they're using it, or the strength of themselves, the CV, all the digging in to build that narrative. We're now actually arm in arm out. We've got the underwriter is taking it to a credit committee because they believe in the deal. The salesperson put it to the business because they believe in the deal. The customer has gone with the lender because they believe in the lender, and the broker has gone with the lender because they believe in the lender. So we're all aligned. And credit committee is just about making sure. I think on the first slide that you showed, you had some clippings, and one of them was about Roma's record redemptions month, which, well, that's the success month for us as a business. So that's the lens we do, is we're going to lend money to receive it back. It's not about square pegs, square holes. Lending, I've actually been in some of the credit committees we have in Roma are probably the most commercially lensed credit committees, where sometimes you might take a deal in and we might just structure it slightly different, which moves it through. It's a place where deals go to get done, but we will kick the tires. Believe me, the underwriters don't have the easiest time in there because you're testing their work. If you've ever tried testing an underwriter's decision, they are very prickly people when it comes to that point, but they're there because they believe in the case. And I think that's the important thing to remember. Credit committee is an avenue to get transactions done. And we have varying sizes depending on the loan size or depending on the audience that is in there. But we're all in there because we want to lend money. And it should, and as long as it's pitched right at the beginning and followed all the way through. But we will look at everything that Terry's discussed previously. But we'll also trust the judgment of our colleagues as well, because they wouldn't be bringing it to us if it wasn't the right one to do. You mentioned criteria before, Glenn, ebbs and flows. It does, but so does commerciality, so does the marketplace. Part of our credit is sometimes influenced by what we're seeing at the back end. So is there a particular area? Is there a particular property type? Is there a particular exit strategy that we know is under strain? We've seen it when the money markets tighten, if the exit was refinanced. We've seen it when, if the exit's sale and the ability for people to get first-time mortgages is restricted. We're always looking at, can we get repaid on this? And more importantly, can the borrower protect their equity? And that's that successful business partner.
Yeah. And like you say, rightly, it comes full circle from what we said, really. It's honesty of the application, the applicant, it's having that story. The brokers have the confidence, first of all, to bring the story to Roma. Roma to have, like you say, first line sales, to have the confidence in the deal to present that deal and show why it's a Roma deal.
Yeah.
So what I'll do is straight back over to you, Terry, and it's the same question around the credit side of things, credit committee.
Yeah. So just so how we're structured. So when a broker sends in the deal, it gets allocated to a relationship director, relationship manager, whichever kind of phrase you're more accustomed to. And they're the ones who will come and meet you and go on site and meet the borrower. And they're the ones who will paint the story and write the credit memo that then goes to our credit committees. And that relationship director will stay the contact of the clients throughout the life of their deal. They then also work with a portfolio manager who does the in-life management of the loan. And Michael made a great point earlier on about that credit paper, and the story about the borrower does go with the portfolio manager on when they're doing the in-life of the loan as well, to understand the borrower. But the relationship director will be they're one of their key contacts throughout the life of their deal. And it's the relationship director that presents the deal to credit. So we have two different credit committees. So for sub 10 million, we do the credit paper and we submit it via our IT system, and credit will look at it and then they'll come back. And so subject to, it's what you always find, I should go back one step. So when an RD's been on site and met the borrower, they then will normally email back to the broker, say, look, can you give me a list of all this information? Because then I can paint the picture, write the story. So the sooner that comes back, the sooner we can get a deal into credit. So if the RD has all the information and has put the credit paper together, for sub 10 million, when they submit it through, it's normally a 24-hour turnaround time for credit to come back. Now, they will just respond back electronically. So we don't actually have to sit in front of credit and present the deal. It's done via the paper. So that's why the paper is very key for sub 10 million as well, making sure we get that story right. If there are any questions, they will pick the phone up to us and talk. But we've had responses back from credit approvals within 2 hours of us submitting the paper for sub 10 million. So that's a kind of our streamlined type of credit. For anything that's an exception to our policy, or whether it's 10 million and above, we go to credit committee. And is what credit ask is they like us to send the paper about 48 hours in advance of their credit committee. So the people on the credit committee, which is usually 3 people, can read it and digest it in time for us to kind of sit and present. And then what happens is the RD, it's always usually done dial in now, which is great. So they'll dial into the meeting and they'll spend about the first 10 minutes just giving a summary of what the paper, really trying to come up with the key points, the key strengths of the borrower and the scheme. Also talking through any kind of negative points that may have been raised and why we're comfortable with them, why we've mitigated them, why we think it still makes for a very good deal. So they'll do that summary for about 10 minutes, and then it will open up to questions by the credit committee. And like I say, they will then just kind of look to, and it comes back to the point I mentioned before, in most cases, people on credit will not have met the borrower and not been on site. So it's their only opportunity to really understand the borrower and the deal. So they'll sort of chuck out questions and the RD will then come back and respond accordingly. And that's where the bigger challenges are, where they really want us to explain more. So the more detail that we can get to put in the paper, actually the less questions we get. Where we have less questions, and again, coming back to an earlier point, I can imagine when we start submitting deals forward now and we say, yeah, the last 3 schemes have all been on time and budget, we're probably going to get challenged by credit on that to ask us, is that real? Because we've all seen what's been going on. So I do urge people, just let us know how problems were fixed. Honestly, we'll still get the deal, we'll still get airtime, we'll still look at it. It'll be just really refreshing to hear that. So credit credit committee lasts probably about half an hour or so of kind of questions and going back and forth. We have a 99.6% credit approval rate at that stage. So it's very rare that we ever get a decline. We sometimes might get, it really happens in probably maybe 2% of the cases, we get sort of some further questions that we have to go back and just ask a few more questions to then go back on. Very rare though, because like I say, between the RD, the broker and the borrower, we usually are able to get all the information we need and paint a really good picture. And then just the opposite, we always do go to credit prior to the borrowing incurring any costs. So we don't look to go with a valuation report or IMS, because we don't want the borrower to incur any costs before they can get comfortable knowing that as a bank, subject to those 2 reports coming in, we strongly believe in the deal. And then probably it's worth just mentioning, because we do get credit approval prior to those reports, once we do get those reports in, we then do have to go back up to credit again just for a final approval. But again, 9 times out of 10, or even higher than that, really, it's the only real change you often see is just the IMS might say the costs are a bit under, so you need to tweak that, or the valuer might say, well, actually the GDV is a little bit lower, so we need to kind of tweak it. It's very rare that either of those 2 reports would bring out something that would stop us doing the deal. Normally, we can find a solution and sort of tweak the deal. So there is a 2-stage credit process.
Okay, no, that's really helpful in the fact of like the brokers can now understand the sub 10 million and the north of 10 million, the complex are completely treated in a different way. But the success rate is obviously a good point, right?
Yes.
I'll say with yourself, Terry, and to be fair, it's probably a slight iteration of that question for our final one, which red flags. What a deal lands on the desk. What would you say is an instant red flag for something within a case?
I think, and again, I'm so sorry to everyone listening for me to say this point again. Someone saying that they've done their deals on time, on budget, that would be a red flag for me. Definitely that one. I think also just kind of looking at whether or not the borrower has the experience for what they're looking to do. Now, so you could say a borrower's, sort of previous experience is building 2, 3, 4 houses, and now they want to build a block of 20 stories of flats. Now that's a big jump. And so, that's a kind of, it's a red flag in how big they're jumping. Borrowers will always want to grow, and we're here to support them. So you might get a borrower who's done 4 houses before, want to go and do 20 houses, not a problem at all, similar type of build, so that's all kind of fine. It's when they're going into a sector, maybe going into the student sector, a sector that they've not got experience in before. Again, it doesn't mean you can't do the deal, but you definitely need to dig a bit deeper. You need to understand who's the contractor they're using, who's going to be the project manager, how's it really going to, because it's completely different. I would say that's kind of a semi-red flag. Also, developers who are looking to develop sort of far away from where their normal place of business would be. So if you've got a developer in Essex who's developed in Essex, and all of a sudden they're going to do something up in Scotland, how are they going to manage that? How do they understand the Scottish market? Do they know that? So that would kind of be a little sort of red flag, something to understand a bit more. There might be a great reason behind it. They might have a partner who lives up there, business partner lives up there that's going to project manage it. We can work it out. But it's just kind of understanding those kind of points that could be red flags as to why they're looking to do the deal. And then finally, I would just say, again, just making sure it makes sense in the location. Like if they're looking to build in a small village, and again, it's going to be, it's got a population of 200 and they want to build 150 units, and that's probably a bit of a question as to does that make sense in the right scheme. So I'd say they're probably the kind of red flags, where it doesn't mean you can't do the deal, but we definitely need to understand a bit more and kind of really get behind it a bit more.
Yeah, no, it comes back to really the story and the feasibility of that, doesn't it?
Always
that's the base.
Always comes back to that.
Yeah. So same to you, Michael. Really.
Yeah, I echo Terry's thoughts on the market liquidity is a key thing. There's no point building 5 footballers' houses in the middle of Moss Side, Manchester, because we know that's not a liquid market to do. It's got to make sense, even if the numbers do stack on paper. And one of the big things for us is actually what else has the borrower got going on? Because what you don't want is somebody who is too stretched over multiple schemes. Because as a lender, then the worry is, will some of our drawdown funds be siphoned off to other projects? And then the strength of that PG actually comes under question. They might have a good PG on paper, but if they've also got borrowed with other bridging lenders or development or refurbishment lenders, what have they actually got on, and how does that fit into the narrative? Always a big red flag for us, or certainly a more questions flag to ask. And then what skin in the game is the borrower putting in? I mean, we operate in a slightly different space to Terry. One day, with the grace of God, we'll have a credit committee for sub £10 million. But at the moment, our credit committee is sub £3 million. But what is the borrower? What are they putting in? Remember, before we phrase it as a business relationship, what are they putting in? What is their skin in the game? Is it liquid cash? Is it that they're using other assets? And where did they come by those assets? If it's other properties, what's the story that sits behind that? And then for us as well, it's the persona. We're very laser focused that there's 3 types of people we transact with as a Roma borrower. We transact with the one that everybody wants to do, the experienced property professional who's been there, seen it, done it, and are continuing to cycle through. But we also like to back the experienced tradesperson who's perhaps made everybody else rich through property, and now that they've got a couple of assets of their own, they want to do their own schemes. We'll back that person. Or a high earning professional in another field who wants to make passive income through property by surrounding themselves with the right team. If it doesn't fit that, if it's somebody living at home with mum and dad, who all of a sudden are buying a piece of land to put 2 houses on, and that's been gifted. There's red flag after red flag there because the skin in the game for the borrower, the experience isn't there, and their ability, back to what Terry said right at the start of this, their ability to be able to navigate through those speed bumps, it's unproven. So that feels like a risky partnership for us. So for us, it all comes down to the borrower. It all comes down to those pieces, what they're looking to do, and the story that's told. And just to echo what I said very early, if you've got comfortable with that, and that's why you're bringing that loan or this transaction to us, tell us how, and we may get comfortable with how you've got comfortable as well.
No, that, to be fair, it's kind of really gone full circle here, isn't it? It's borrower from the perspective that we're looking at here in Shawbrook and Roma. So what I'll do, so I know we've kind of overrun a little bit. If there's any questions, I'll now open up the floor to any questions from the broker side. Okay, so first question. So we've got a question from Lee Robinson. So first of all, I'd like to get, Lee, like to give Lee a little bit of a shout out here because he's an absolute advocate of the Brickflow system, and he uses it how it is best used. So he uses it how it's best purpose, and he's getting the results from that. So first, I'd like to say that first to Lee. So it's like to say thank you to a recent completion, Michael, which I think we spoke about. I think it was yesterday.
You're welcome. Thanks for the business, Lee.
So in regards to the company, so the question I also have. Okay, so some of the other points that Lee said about the story point is around, the actual like you said, the company, the structure, where that company's come from, but not just that. How is it being secured? Where are the funds coming from? Who is the contractor and the background around that side of things? How important are them points as part of the story?
Yeah, I mean, I'll jump in there first. For us, absolutely, it all forms part of the borrower persona, doesn't it? It all forms part of why we're here. What we will find is that people will have liquidated companies. I think Terry mentioned the last 4 years if somebody's not had a book. If somebody's been operating since 2008, they will have invariably been having problems back then as well. So we will find things that have happened in the background. It's finding out why and what they did to maneuver away from it. So source of funds is obviously massive from a AML piece, but also back to my point about skin in the game, making sure it is that her cash or her equity from the borrower that they're putting into the transaction, but understanding that company structure and also what other companies they're involved in and how those companies are performing gives you a window into, back to Terry's point, how they will navigate those speed bumps with you as part of the thing. So we use tools to be able to not just look at the existing, so more often than not, there's not much company information on an SPV. If they set it up for that transaction, we will look into all the directorships that borrower has had and how that's performed.
Yeah. No, that's fine. What I'll do, like I said, I'm wary of time now. I'm aware that we said a 45-minute webinar for everyone to be on here. So if there is any further questions, please do put them in the chat. They will be looked at, and we will speak to Terry and to Michael, and we will come back on them questions. So I really appreciate everyone's time, and thank you, Michael. Thank you, Terry, for joining us today. So
thanks for having us.
Our pleasure. Thank you.